Bitcoin has surged to a new all-time high of $123,000, marking a significant shift in the cryptocurrency landscape. With massive institutional inflows and pivotal regulatory discussions underway, what does this mean for the future of digital assets? Bitcoin's price trajectory has recently captured the attention of investors, as it may soon enter a price range between $130,000 and $170,000. This potential surge hinges on two key factors: continued inflows into exchange-traded funds, ETFs, and the successful passage of the Clarity Act, which aims to provide clearer regulations for cryptocurrencies. Historically, institutional interest has played a significant role in driving Bitcoin's price, and this trend appears set to continue. As major financial institutions explore Bitcoin, their involvement signals a growing acceptance of digital assets. Conversely, altcoins may struggle to gain traction if institutions remain hesitant to diversify their cryptocurrency portfolios. However, certain altcoins like Solana and XRP could sustain their upward momentum as ETF investors strategically allocate funds. The regulatory environment surrounding stablecoins is also pivotal. Circle, a prominent stablecoin issuer, recently experienced a remarkable 530% surge in stock price following its initial public offering (IPO). This uptick reflects heightened optimism regarding forthcoming regulations that could legitimize stablecoins in the financial ecosystem. Stablecoins are increasingly seen as a bridge between traditional finance and the burgeoning cryptocurrency market. Additionally, the Federal Reserve's monetary policy decisions will significantly influence Bitcoin's performance. If the Fed opts to cut interest rates in response to a soft jobs report, this could further bolster Bitcoin's rally, as lower interest rates typically encourage riskier investments. As we analyze the current landscape, it is crucial for investors to monitor ETF flows, regulatory developments, and Federal Reserve policies closely. These elements will serve as potential catalysts for future price movements in the cryptocurrency market. With the convergence of these factors, investors should prepare for significant price shifts for breadth, particularly as legislative advancements and monetary policy adjustments unfold in the coming months. The journey to Bitcoin's new all-time high has been shaped by a series of significant events over the past months. Bitcoin had previously been consolidating in the range of $60,000 to $65,000, influenced by Federal Reserve uncertainties and a strong U.S. dollar. The Federal Reserve's interest rate policies have played a crucial role as investors closely monitored potential shifts that could impact asset valuations. Recent geopolitical developments, notably the cancellation of U.S. strikes on Iran, have alleviated market tensions, contributing to a more favorable investment climate. This easing of geopolitical risks has led to renewed investor confidence, encouraging capital inflows into cryptocurrencies. In the backdrop, companies like MicroStrategy have been accumulating Bitcoin at an impressive rate, now holding approximately 4% of all Bitcoin, amounting to 64,000 BTC at an average purchase price of around $75,000. This corporate buying trend signals a growing institutional interest in digital assets. Meanwhile, Japanese firm Metaplanet has surpassed them with 775 BTC, highlighting a competitive landscape among corporate investors. Most importantly, long-term holders have maintained their positions despite fluctuations in price, reflecting an unprecedented level of conviction among investors. This steadfastness indicates a belief in Bitcoin's long-term value, despite short-term volatility. These factors, combined with the anticipation of legislative changes that could further legitimize cryptocurrency transactions, have collectively set the stage for today's remarkable price surge. The implications of this surge extend beyond individual investors. It could signify a broader acceptance of Bitcoin as a legitimate asset class. As Bitcoin continues to break new ground, analysts suggest that the momentum could carry forward into the coming months, potentially leading to even greater adoption and higher valuations. The trajectory of Bitcoin now appears poised for continued growth, with institutional interest likely shaping the future landscape of digital currencies. The recent surge in Bitcoin's price to an all-time high represents a significant milestone that transcends mere numbers. This unprecedented rise signals a transformative moment for institutional adoption within the broader cryptocurrency market. Over the past few years, Bitcoin has evolved from a niche asset to a mainstream financial instrument. The influx of $1 billion into Ethereum ETFs highlights a growing trend where institutions are beginning to diversify their crypto portfolios, indicating a shift in investment strategies. However, Bitcoin continues to hold its ground as the cornerstone asset, reflecting its enduring status as a digital gold alternative. The implications of this shift are profound, as institutional interest can lead to increased legitimacy and stability in the cryptocurrency space. With more established financial entities entering the market, Bitcoin and other cryptocurrencies are gaining recognition as viable investment options. In addition to market movements, the ongoing discussions in the House of Representatives regarding three pivotal crypto bills, including the Clarity Act, are crucial for the future landscape of digital assets. These legislative efforts aim to provide essential regulatory clarity, which could significantly influence the development and adoption of stablecoins and other digital currencies. Such regulations are vital for fostering a safe investment environment, encouraging broader participation from both institutional and retail investors. Market sentiment remains overwhelmingly optimistic, as demonstrated by the Fear and Greed Index, which currently stands at 63, indicating a bullish outlook among investors. The total cryptocurrency market capitalization has soared to an impressive $4.13 trillion, underscoring the growing acceptance of digital currencies. Furthermore, long-term Bitcoin holders now control approximately 16.5 million BTC, illustrating their steadfast belief in Bitcoin's potential as a store of value and a hedge against inflation. For the average investor, this surge in Bitcoin's price and the corresponding institutional interests signal a gradual integration of cryptocurrencies into traditional financial systems. This evolution could reshape investment strategies and economic policies as more individuals and institutions recognize the value of digital assets. Looking ahead, as regulatory frameworks are established and institutional investments continue to grow, the cryptocurrency market is poised for further expansion. This could lead to an era where cryptocurrencies are not only speculative assets, but also standard components of diversified investment portfolios, fundamentally altering the financial landscape for generations to come. On July 5, 2026, Bitcoin experienced a brief but significant surge, reaching a new all-time high between $122,000 and $123,000. This remarkable event coincided with the kickoff of Crypto Week on Capitol Hill, where lawmakers are engaged in critical discussions about the future of cryptocurrency regulations. This surge in Bitcoin's price was notably fueled by unprecedented inflows into Ethereum exchange-traded funds (ETFs), which exceeded $1 billion in a single day, marking the largest inflow ever recorded in the cryptocurrency space. Alongside Bitcoin's stellar performance, other cryptocurrencies such as Solana and Dogecoin also saw impressive gains of 9% and 8%, respectively. However, it was Bitcoin's record-breaking price that captured the majority of market attention, underscoring its status as the flagship cryptocurrency. The backdrop for this surge is a rapidly evolving regulatory environment. In recent months, U.S. lawmakers have been grappling with how to manage the burgeoning cryptocurrency market, which has grown exponentially. The anticipated legislation is expected to provide much-needed clarity for institutional investors who have been hesitant to fully engage with the market due to regulatory uncertainties. This renewed confidence among investors is reflected in the substantial inflows into ETFs, which serve as a more traditional investment vehicle, making cryptocurrencies more accessible to a broader audience. The impact of this surge is multifaceted. It not only signifies renewed institutional confidence, but also suggests a shift in public perception regarding cryptocurrencies. As Bitcoin and other digital assets achieve new heights, they may gain further legitimacy as viable investment options. This could lead to increased participation from both retail and institutional investors, potentially driving prices even higher. Furthermore, the success of Ethereum ETFs may pave the way for similar products linked to other cryptocurrencies, expanding the market further. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market remains optimistic. If regulatory clarity is achieved, it could unlock a new wave of investment and innovation, fostering a more robust and sustainable digital economy. As lawmakers continue their discussions, the cryptocurrency community is eager to see how developments will unfold, anticipating that the momentum generated today could set the stage for a transformative future in digital finance. As Bitcoin sets new records, what will be the next major catalyst for its price? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.